Okay, so what we're going to do is we're going to review this price action, okay? What is that? That is Tuesday's price action. Yeah, Tuesday on NQ. Absolutely a monstrous day. But so let's just start from the top down. We're going to go down and do everything for us. Sure, I don't need to, but we'll do it anyways. Let's put these up to daily. Okay. So we've been in bullish order flow on NQ for 13 days so far. One bearish candle, right? So we're just going straight up. So the obvious thing we're asking ourselves when we start looking at a chart is, where are we coming from? Where are we going, right? Simple. So we've put in a new low here. We've come into a volume imbalance, which we can treat the exact same way as an FEG. Coming to that, reacted. Also reacting off this old low, old high, I mean, right? So just basically you're standard like breaking retest, right? But prices specifically come down, right? Correctively manipulated through these lows, filled the volume imbalance, collected orders, testing that old high here, lots of liquidity, starts to rally up, right? So you get significant bullish reactions, right? If I go to NQ, we were looking at, is there anything specifically in here? No. Okay. So let's just go back. All right. Start to displace away, right? So just looking at the price action alone, I'm not going to go into structure on this time frame. Obviously, we know that the ISP is here, right? This is where we get an ISP. But let's take our attention back down to here. So when we pushed down and liquidated this, we didn't immediately know if we were going to have any significant change in delivery, but we do see that. So tapped into that old low, into that volume imbalance on the weekly time frame. 1, 2, 3 bullish candles, nothing of significance, a little bit of a gap here. But then we get this big candle that just rallies up hard, right? So for the whole day, very bullish order flow. No topside wick. Not that that necessarily matters too much, but this just continues to rally throughout the next day, right? So coming into this very strong into this gap here, right? Then obviously the next day we break above here, and that confirms us. But let's drop into the 4-hour time frame. We rallied down here. Let's see, we have anything on NQ? Yeah, we have SMT as well. So higher high here on NQ and a lower low here on ES. So you have beautiful SMT. There's your reversal signal. It's in the right area. You start to see bullish order flow, and we can track that. Of course, you have volume imbalance here. So ISP here on the 4-hour. This breaks, pushes up, pushes back down. So we're being held between these two areas, right? And we're getting a little bit of corrective price action as expected. Then we break up above this region. So now we have nothing holding us down, essentially, right? Comes back, no FEG. So we're going to look at that order block body. When there's no FEG, we want to specifically look at the bodies. When there is an FEG overlapped, we want to look at the wick and the FEG, okay? I'm sure you already all know that. If you didn't, quick tip. Taps into the order block and then propels off it aggressively, right? So there's your, this is obviously how we know it's a good order block, right? As soon as we tapped into that body within a couple pips range, absolutely rallies off and then continues to run. We come into a type 1. Type 1 gets next to no reaction from price. So look at the body for now. Next to no reaction from price, just continues to rally up. Gives an ISP. Right, so now we know we're clearly in bullish order flow. And the question is, well, where is liquidity? Right? There is no liquidity. This was the internal range liquidity right here. Right? There was a volume imbalance here. Nothing is being affected by price, right? And we're not showing any significant reactions to any of our POIs, right? Any of our premium arrays. Okay, so in ICT concepts, he does what things called PD arrays, premium discount arrays. So they're POIs, right? We just call them POIs for simplicity's sake. But a PD array is anything that the algorithm deems a premium price or a discount price. So when the algorithm hits something that it deems a premium, it will then go and hunt something on the other side that it deems a discount. So that could be a breaker block, an FEG, liquidity, right? There's a hierarchy to these things, right? On the flip side, if it hits something that it deems a discount, for example, down in here, deem price is at a discount. It will then hunt something a premium. However, we do see that what our POIs are, so POIs that are above us are deemed premium, POIs that are below price are deemed discount, right? That's really all we need to know as traders. Okay. If you want to dive really deep into the ICT stuff, be my guest. I think it's actually beneficial. I'm not going to teach. I'm teaching trading. I'm not teaching ICT concepts. If you want to go learn ICT concepts on your own, that is on your own accord. And I think it's actually really helpful, but it's not going to, it could indirectly make you a better trader, but ICT concepts and trading are two different things, right? We use ICT concepts to help us trade, and we built a trading system around it, but it's not trading. Like when you learn ICT, you're not learning trading. You're learning about how the markets move. It's different, right? It's more an analysis, right? Anyway, so it came into our POI, doesn't give us a reaction. Came into liquidity, doesn't give us a reaction. So immediately I'm thinking, okay, well, it's clearly not causing any changes when we're running these highs. We're running this imbalance. We're filling this balance, no reaction. We ran this volume balance, no significant reaction. We've ran above this high, no significant reaction. So I'm asking, okay, well, if nothing on the internal side is being reacted to, then I'm going to look at the external side, right? Because that's where the most of the liquidity is. Okay, most liquidity is at the external parts of dealing ranges. Okay, and that's where you get the biggest reactions. So this is the dealing range. Below here and above here, this is where most of the liquidity is. However, if we have an objective that's lower, then price will look to hunt typically internal range liquidity before going down, unless it's very manipulated, which happens, right? This happened on EU a long time ago. I can pull that up here, right? Where it hunted external range liquidity before selling off. Sure, that's accumulation tactic or distributing orders to go lower, right? That can happen, but generally we're going from external to internal, from external to internal. We understand that. Okay, but here we see it's not reacting to our internal range liquidities or any of our PD arrays, any of our POIs, right? Which imbalance or liquidity. Not doing any of that. So we're looking up here. So that's where I frame my higher time frame bias, right? Higher time frame bias should always be the backbone of your trades. My higher time frame bias is telling me that we're going to run this liquidity. And I know you guys all know this, but I'm going to reiterate. Higher time frame bias doesn't only mean the final target. It also means just your daily bias, and your daily bias can be formed from basically what you think the daily candle is going to do. It's not the final print of the daily candle, but it's how it's going to form, right? So if we came into, for example, ran this liquidity, right? My daily bias now is to have a pullback. Okay. And then I can build, let's assume that my target was this, and I knew that we're going to come down here. However, when, where's my drawings? When price came into here, my daily bias can be bullish or choppy, right? Or range bound, I should say. So I can take buys in here, even though that I'm very aware that my final target is down below this low, I can still take buys here, right? So just to clarify that, like higher time frame bias doesn't just mean the final target. It means like every single day, what is my bias going into the day, where I can short the market on days that I believe is going short, or I can just sit out on those days, right, and wait for the highest probability setups in line with the highest time frame or the ultimate objective, which is above this high, right? Okay, so I wasn't sure 100% if we were going to run that high, right? I figured if we run something within these levels, I was looking at the last up candle. This is what I do, not the last point of inducement bullshit. I look at the last up candle, right? Because I know above this up candle, there's going to be a significant amount of liquidity, right? Because if I go on a lower time frame, that's structure, right? You can see that's a structural level. There are equals. That's what I was looking at, right? And you can see my drawing is already there. And on the 4 hour, do we tap in? Nope. So nothing. This is left unfilled. That was then on the 15 minutes. Right. Okay. So price runs down, takes out all of this from PM session to central bank dealing range, the whole last day's trading, all of London, down into the PM session of this day. It runs all of this liquidity. So the whole session is liquidity, runs it all, displaces away, and then continues to range for the rest of the day. So let's just follow order flow. I'm going to be very, very meticulous with this. We have a balanced price range right here. See how beautifully that taps right in. So when we have a BPR and we have an FEG, we want to favor the BPR because it's more accurate. It's not always going to get hit, but generally it's more accurate. Also, if we have a BPR that is, for example, you have one candle here, two candles here, then you have like one in the middle, and then you have a candle here and a candle here, right? Let's say you had like a wick here, and then you had like a wick here, whatever. Like a wick like this and like this. So now we have like two BPRs, right? So we have like this one, and then we have like this one, right? So the one that we're going to favor is the lower one because price is more likely and it's safer, right? We're hedging, we're trying to calculate a risk here. Is more likely to run to the lower BPR. Okay, so if you have two BPRs, it's more likely to run to the lower BPR. We can also just add on an OTE, right? And then see if that BPR is in that OTE, right? Let's say we had another structure, like the up move ends here or something, right? Something like that. We can also just use the OTE, you'd see, right? So pair up your confluences, build some confidence, but generally it wants to run to the lower BPR, right? Okay, not applicable in this case, but just to give you that. BPR price ranges. New day opens on Monday. We can mark that out. It's a volume balance. It's also a new day opening gap. Price holds it as resistance, holds it as resistance, manipulates above, takes out all the liquidity on the Monday at Tuesday, 4 a.m. Still holds it as resistance, displaces away, comes back up, fills this imbalance, comes into the type 1, sells off, runs London low. Okay. Runs London low. What time does it run London low? 6:30. So that's pre-session. It's still a little early. Where the fuck did... There we go. So still early. But it runs London session low into BPR, which it deems a discount, right? So now it's liquidity is a discount, right? Sell side liquidity is a discount. Imbalances are discounts, right? Type 1s or order blocks. So ran into this area that it deems a discount. It obviously knows that the higher time frame intention is to run liquidity up here, but it still needs to facilitate orders on the sell side as it traverses to its final target. Okay. 6:30 a.m. rips, creates an imbalance, fills that imbalance, gives us an ISP, gives us an SMB. So obviously I wasn't trading at this time. 7:30 is too early for me. Rallies up, and I see that it is just respecting the down close candles. It's also respecting this beautiful breaker. So you get an A, so you get the up move, or sorry, up, lower low, breaks up, retest it, doesn't come below the top half, right? I'm not trying to be so refined with it. I wasn't even at the charts at this time. I just want to help build that narrative, right, of what's going on. Also fills an imbalance here. So it's doing so many different things at one time, just on this single time frame. Rallies through it. Pushes up. Next candle opens, pushes down, taps into that FEG to the T, rips off. Okay, great. So I'm going to get onto the 5 minute now. This is where things get interesting. Okay. So respecting the top half of that breaker, we're at 930. So this is right before the open. 930 open. Price sweeps us high, rallies down right at the open. We know that there's going to be some sort of volatility right at the open. Taps into the order block, rallies up, comes back down, taps into the FEG, continues to rally up, break structure. Now we know that obviously we're going to go higher, right? This is where I'm down on the 1 minute now. If we have that 5 minute area right here. So that's that 5 minute FEG. Everyone following along?
Yes, sir.
All right, cool. So taps into that 5 minute FVG on the 1 minute. Okay, I didn't have my dots on the chart, right? I do this all in my head now, but for the sake of it, ISP here on the 1 minute, pushes up, pushes down, displaces, pushes down, creates a swing point. We have an FEG up here. This is where things get very interesting as well. We push up into that FEG, start to push away, and I almost got caught on the wrong side. I actually took a short here. Pushed back up, started to dance in here a little bit, and I closed it. And I was like, this does not feel right. So I waited patiently, and I was looking at the rest of the chart. I zoomed out. I immediately went out to the daily time frame. As soon as I feel like something is not right, instant trigger to go to the daily and not remark, but reevaluate everything I'm doing, because clearly I'm not thinking right. If I have this sudden feeling that something's not right, I need to quantify that, right? A feeling is not enough. I need to understand where that feeling is coming from. So I immediately went to the daily time frame and I started to rebuild that bias. And I was like, wait, price is going up. I need to get out of this funk I have going on, which is probably from the day before, because I think I took a loss the day before this, or yeah, I took a loss. My first day with the new accounts, I took a loss. It was I was down 800, I think, the first day, and I was like, that fucks me, especially the first day, right? Like that's a lot to deal with, because you have these high expectations. Then I immediately was like, hey, let's get in the zone, put on some music, reevaluated. I understand that I only have a few minutes to really make a good decision here, right? This is trading. If something wants to go, it wants to go. So I patiently waited, got in the zone. I waited for price to run up past this FEG. So I was really looking at this FEG here, right? Because I wanted to see that this is the resistance holding us down. I want to see that get ran. It gets ran. We displace through it. Okay, what does that give us? We've displaced through it. We get a beautiful BPR. We're going to hold that as an inversion fair value gap, reclaim it. Gives us another fair value gap here on the 1 minute. I executed in here. I actually think I took an entry down in here as well after I changed my bias. I took a one contract entry here. I scaled in for 2 more here. I think I had 5 full contracts by the end of it. And then I'll explain this to you guys in a second as well. So now we have a breaker, right? Or sorry, an order block, right? So here's something that's interesting as well. We can start to see when you get good, you start to see things before they're confirmed, okay? So I knew that this is a breaker beforehand, before we actually broke the high, and I'll explain that to you. So there'd be like an implied breaker, so to speak, right? So this is setting up in the algo to become a breaker. I know this because it's backed by my higher time frame direction. It's confirmed by the order flow leading up into it. So when we tap into here, price rallies up. We get a reaction, comes back down. I took an extra entry here, took a little bit of confidence, of course. And that's why we don't read candle by candle. We read the overall picture. Taps in, pushes up, and immediately here, as we start to dig into this OB, I'm like, okay, this is good. And that's when I drew this box on. If you notice, it's only half of the breaker because I want to see it holding at the half point. So when we start to break up above here, I want to see it hold at the half point. Okay. Now, I was able to apply our rules fractally. Okay. So we had an ISP here, broke this high. So what does that give us on a lower time frame? ISP here broke the high. What does that give us, guys? We're in a new what?
A new dealing range.
We're in a new dealing range, exactly. So I knew that we're in a new dealing range on the seconds. I know that price wants to start to rip up, which I'll get to that in a second, the reason why. So I was able to apply the OTE to this, see that fill of imbalance, because I'm like, okay, price might, if I'm lucky enough, price will come and fill that imbalance immediately. And that's called immediate rebalance. We're going to talk about that too. But essentially, that's one of the many signatures that's telling us that price really wants to start going straight for liquidity. Okay. So price immediately rebalances the range, fulfills what it needs to do on the sell side so that it can rip up to the buy side. Okay. Where does it come to? Straight into equilibrium, right into discount pricing, right? The algorithm immediately goes, because it came to something it deems a premium, immediately comes down, fulfills the discount, and then starts to rip up again to more premium. I had an entry right here, so I scaled in right on the orange line. That's a 50%. I moved my stops up to here, so I'm already in profit now. I'm guaranteed profit now because I took an entry in here. I took 2 entries in here, right? So these are all at break even, and now I have 1 more entry in here for 1 contract. So this contract is funding this one. These 2 are at break even, right? This is how we have to scale. We only scale when we know that we're not taking on extra risk. Okay. And this is how you get big ass days. Okay. So price here in this candle immediately rebalances this range. I can't get on the 5 second because I don't have it, right? Unfortunately. But you would see that this is a structural level. If anybody has a 5 second chart, does anyone have premium?
Yeah, I do.
Do you want to pull this up? It's Tuesday, the 7th of November at 10:24 a.m.
Yeah, I've already got it up. I made a case study on it yesterday.
Can you pull that up on like the 5 second or the 15 second? Yeah, I'll give you access. You can share your screen. Hold on. There you go.
Where am I?
The reason I want to show you guys this is because we can start applying our rules fractally because the markets are moving. Yes, there's timeframes, but timeframes don't actually exist. It's just a rate. The timeframes are just telling us the rate at which the algorithm's basically performing. The algorithm's performing on multiple timeframes because it's not looking at time. It's just looking at desires in the market. The time frame is just for us to make sense of it humanly, right? They're not looking at that. They're just looking at like the order book. All right, yeah. So 10:24 a.m. Can we go to the 10-second chart? Maybe right in there.
I don't know if it does 10 seconds. It'll do 5, 15 seconds. Yeah.
Okay. At 10:24.
Yeah.
10:24. That's 10:24.
Yeah, right here.
Okay, let's go right to the start. Yeah, so that push down there, 1, 2, 3, 4 candles.
Yep.
That is the rebalance, right? So if we grab from that low, the lowest low, to where are we? Is it the lowest low? So the 10:22 low at 10:22. Yeah, that one.
That's good.
Yeah, because you're not on futures. That actually sweeps. Okay, so that would be the low because you're not on the futures.
Yeah, do you want me to?
No, it's fine. It's fine. We understand that. Yeah, actually, you know what? Yeah, sure. Go to NQ. So you have to go to NQZ now because it's a new contract. You got to go to the different chart, NQZ. NQZ.
Which one's that?
And this. So if you click the drop down menu. Yeah, that works. Okay. So yeah, now you can go back to it. 10:24 on Tuesday. Right there, yeah. 15-second chart.
I'm just gonna draw this out real quick for reference.
Yeah, go to the 1 minute. And put the dealing range from here to here. This one. Okay, now go to the 15-second. I will look at that, right? So this is a structural range. Now, I'm not saying that you guys have to trade like this, right? But eventually you could, right? But I just want to show you guys, how these markets are actually moving and booking, and how you're not stuck on one time frame. But we can see here, all it is a dealing range, right? And we've pushed down to the 50%. So, and this is an ISP. So let's imagine that this was a 4-hour chart. You could easily put a limit on the 50% and just cover the protected low. We know that it's a protected low, right? I don't need to know that this is there, right? Because I know that this is an ISP. But yeah, that's what price was doing, is it's coming down to rebalance, right? Immediate rebalance just means it's doing it on basically the same time frame without actually creating an FEG. So it comes back, it rebalances. I don't even need to know this. All I need to know as a trader is that we're coming into that 50%. So if I'm lucky enough that it comes back down, and this is over like years of intuition, that I can kind of, I was able to see that opportunity there and take it. So I put my limit there, got the scale in, and I knew basically my thought process is that this is an ISP. On the 15-second, we've put in a new dealing range. This is protected. If I'm lucky enough, price will come back down, tag me in at the 50%, continue, and then it continues, right? So it's very simple if you break it down that way. It's very hard to execute in reality, but it's very simple in practice, right? Okay, so I'm going to take the screen from you now.
Yep.
You can close it. Thanks, man. All right, so that explains this entry here, right? So all it is a new dealing range, right? We've created one, push down, ISP breaks the high, that creates a new dealing range. I'm very confident that price is going to continue up. I get in on the immediate rebalance on the 50%, price pushes up, and now I grab this I grab 50% of this breaker and I carry that over, and I want to see that supporting price. And this is another reason why I looked at this as being high probability, because I know that if I'm correct in my analysis that this should be supporting price. And now that we've closed above it, it shouldn't come close below it, right? So if I get a pullback, I definitely want to buy it, right? So I have all of these different things layered on top of each other that are all built around simply the fact that this is an ISP. And because it's an ISP, it's protected. And because we haven't hit liquidity yet, it should be protected, right? Now, let's take our attention to here. And this is all recorded too. I recorded all the entries, so I could share that with you. Liquidity cloud, cost prices pull to next liquidity. So what does this mean? Okay. This is inducement. This is what inducement is. Okay. Like this is what inducement is. The inducement is not what you guys is not what, you learned at FM. I thought inducement was. That's not inducement. Inducement is baiting people in, building up liquidity to extend that move. And my idea was, as soon as we absorb this liquidity above this high, we're going to rip. It's already offering it. Okay, whatever. All right. So we push down, rebalance, push up, push down, comes into volume imbalance, right? So we're just tracking the things that it's testing, right? I need to mute this. Is working with you and Bowman. I need to mute the fucking thing, man. Hold on, guys. Okay. So we're just tracking the things that it's pinging off of, right? This is how we track order flow, right? We're tracking everything that it's pinging off of. Now, are we going to trade it this way? No, our model, we know what our model is. Our model is, using the ISP system, using the FEGs for entries, and dealing ranges, right? Like OT, breakers, OBs, right? We don't need to take every single thing that it pings off of, but this is how you build that. You train yourself to see, how the algorithm's booking price. So here it fills in the volume imbalance, satisfying those orders, and immediately after it's done what it needs to do here, spools. It absolutely rips, and it rips way higher than I anticipated at first. Way higher. Jeez. But my target was simply above the high. These equals. Is that it? No, that's not it. That's visibility. Oh, it is. Yeah. So it's no, it's this one. Yeah, it was the equals. Okay. So I target simply just above these equals because my initial thing was like, yeah, we can run above here. I didn't want to hold it. Maybe I should have. But I saw these as equals. Of course, these are all equals. But the reason I picked this high is because this was basically the origin of the big move. So I figured that most of the liquidity is probably above here and not above here. Of course, I was wrong, but I don't want to take bets that are going to play against me, right? So price immediately, as we start to get above here, retests the top of this range, does what it needs to do, fills the volume balance. But what I was looking at was retesting the top of this range, rips up. Did I get another entry in here? I don't think so. I don't think I got another. I got 1, 2, 3, 4, and I think I did get another entry in here actually. 5. There you go. So I did get another entry in here. And then it rips up, and I think I took profit somewhere in this wick where I manually closed. And yeah, that was fantastic. Absolutely fantastic. So RR, in terms of RR, I don't know because I'm scaling in with like half risk each time. So we can calculate it though. So this one was like this, 2.5. This one is 3.4. And then I had this one here, which was, I think 1.9. Maybe this was down here because I wanted this to be break even. So 2.8. Obviously I wasn't calculating this in live, right? I'm just putting on the orders and managing the stops. 2.5, 2.8, 3.4, and another entry here for one more risk, which was like this, or 1.62 scaling in. So what is that? 2.54. Divided by 2. Oops, 2.54 by 2 because that was like half risk. This one was full risk plus 2.85 plus 3.41 divided by 3.41. So what is that? About 6-7 R in the matter of 13 minutes because I was trading an absolute parabolic day, right? But the main thing is the time frame doesn't matter. It's just executing on that system consistently, managing the stop consistently, understanding what price is telling you through these little signatures like this, which we're going to cover in tons of detail. I've been looking into them for a while now. Like I'm very cautious to add stuff to the system because I know that I got profitability through the basic system, right? And that's what I give you guys, the basic system. So anything I add is completely optional on whether you want to add that to your own version of it, right? But the base model is 100% profitable and what I trade 90% of the time, right? And what got me profitable as well. And then it just continues to rally, right? And then rallies up above here, comes up above liquidity, continues to push up, creates a new FVG. This is that, oh, by the way, this is a silver bullet as well. Both of these, silver bullet, 10 a.m. FVGs, continues to rally up into buy side liquidity, continues to run up on the day. Okay, so I also came back in the afternoon. I had lunch. I saw that we were in a pullback phase for the PM session, and we're going to continue up higher. Where were we? So we've ran all this liquidity. Where's Tuesday? Pushed down into this FEG, the 4-hour one, and then started to rotate over right over here. So we had this pullback. There's the liquidity. We pulled back into the FEG, last one, right? Last one in the whole sequence. There's no more FEGs. So whenever it's the last one, you're going to get a reaction most of the time, right? So what I noticed here is that we're in what is called a market maker buy model, which I haven't showed you guys yet. But basically, it's an accumulation of liquidity on the buy side, comes back down and it manipulates, and then this is all engineered liquidity basically. Okay, so how do we see that, right? So we have manipulation here where we run these highs, this plays down, gives us an SMB right on the 5-minute. 15-minute, mind you, is fully bullish, okay? Pushes down again, so we're showing strong intent to go lower, and then we range here, right? So this is an accumulation of orders. Those are range here. This is a nice accumulation of orders. It displaces down, immediately reverses, pushes up into this FEG. This FEG is overruled by this one, which is also an OB stack, right? So it comes back, taps into the OP, taps into this FEG, breaks above it, giving us an SMB, because we put in a new low, take the high, sweep, type 1, rallies above it, right? That gives us a breaker, okay? So we have, is everyone following? Get a low, a high, a lower low, break above, breaker, right? Is everyone following, or any questions? I think you guys are advanced enough to kind of follow along pretty well, but anything at all? No? Okay. So
That's good.
next thing that I'm looking at. 5-minute ISP here. Price comes down, FEG in the discount. This is what we tapped into. We come down into, discount of the range where I see all of this happening, rallies up through this FEG on the 5. I was looking on the 1. I was looking on the 5. Creates this breaker block. And I'm immediately looking at this holding as support, right? Because I know that this is engineered buy side liquidity. Okay. So I don't know if any of you guys watched that T-Trades video that he put out, but he covered it before I got to cover it. And this is about projections. Okay. So what we can do is, if when we see a manipulation in price, which we'll go deeper into this specifics to it, when we go deeper into price, into a manipulation, we can measure that manipulation with standard deviations to 2.5, 3, 4, right? And then we can look to the left and see where that liquidity is, and then we can hunt that, right, as a high probability target. So there was an entry in here, didn't take that one. I want to wait for the break. We break up here, push down. All right, we know that we're engaged in bullish order flow. So I'm going to ask you guys now to start to help me mark up the chart, okay? And this is just our standard trading plan. I didn't do anything fancy here. It's just standard trading plan. We've manipulated the low. We've broken the high, gives us an SMB, activates the breaker. We're holding it, pushes up, holding it, gives us a little imbalance. We know that we're bullish, so we're not going to favor that. right? When we're bullish, we're gonna expect that our premiums, right, that our POIs above us are gonna get ran through, and our POIs below us are going to hold as support. Okay, so let's take our attention to this leg here. We have an ISP here, pushes up. What rule do we execute on? Looking from
Sub is liquidity.
Sub is liquidity, exactly. Rule 3. We execute rule 3, pushes down. I got up a little higher. That's fine. My stop was below here. You don't need to, I'm not a perfect trader. You don't need to be perfect in execution. What needs to be perfect is your stop placement. Okay. I got in a little higher. The optimal entry was this with rule 3. And this is what happens when you try and be a little fucking loose, right? This would be a fantastic trade. 2.5 R. I took my profit here because I was already up on the day. I didn't want to get crazy with it. But 5.7 R, amazing. I didn't get that. I executed up here before the sweep down. I got 2.6. But if I just followed the system exactly, I would have been up double. But doesn't matter, right? Your execution doesn't need to be perfect. Your stop placement needs to be perfect, and your take profits need to be really good. Executions don't need to be perfect, right? I understood that I was in this range right here, from here to here. I understood that we're in this breaker block. I understood that we're in this inverted FEG. There's all of these things. I just wanted to get involved. I got involved on the OTE. It simplifies it for me, right? It simplifies it so much more. Just getting in on the OTE, understanding that the market will do whatever it needs to do, but the system protects you following the ISPs, right? So that's how I got involved. The best entry was rule 3. Rule 3 entry was the best one. Okay. Pushes up. I looked at the 2 standard deviations of the manipulation, or I guess that'd be 1 standard deviation because that's just 1 multiple of it. So basically what this means is if we look at this range and we carry that up, it's exactly 1. A little bit higher, I guess, right there. Exactly 1 copy of it. Okay. So I saw that there was buy side above here. I saw that there was imbalance above here. I saw that this was a type 1. I knew that most likely we're going to run this high, but I just wanted to be protected. So I took profit right at number 2, right there. Closed it, done for the day, walked away. And immediately, as soon as we hit that, price just changed condition, went sideways. Okay. So why does this tool work? Measuring standard deviations. Okay, so if there is in fact an algorithm, which I believe, and it's because it repeats in the market constantly. If there is an algorithm in the market, how does it make decisions? Well, it only has 2 variables. It has time and it has price. Okay. So it knows the times in which it's going to book the price. And it needs something to measure that off of. So it uses whatever's to the left. It uses the prices that it has, right? So at this time, at lunch, it manipulated, okay? And then it uses this range as a measurement to book price, okay? So it's an algorithm. It's using math, right? So it's just using multiples of what it already has. Okay, is it going to go 1 times, 2 times, 3 times, 2.5 times? It's pretty like, it's not going to use random numbers in this algorithm. It's going to use simple numbers of 1, multiples of 2, or halves, right? So that's how we measure these things. And if I look at the 2.5 here, right? Why did it select 2.5? Because that's the one that's above liquidity. This is the one that's immediately above liquidity. So it's going to look for, this is my target. How am I going to book price? It's going to book it to, I know this is advanced. I know we don't talk about this too much because it's not necessarily relevant to your trading success, but I want to give you backstory so you actually have faith in why this stuff works. Because if you don't, then it's just, I don't know. For me, I need to know the why. Otherwise, I feel like I'm gambling, right? So above this liquidity, this is the nearest anchor. So it books price directly to that and then reverses directly to it. Once, twice, 3, 4, 5, 6 times. Hangs right around this level and then sells off, right? Do I need to know that it's going to go to this level and sell off? No, I don't. all I need to know is that these are areas in which I can take profit as a trader, right? It's very simple. From a trader perspective, like all of these complex, and ICT is complex as fuck. It is so complex. And initially I thought it was overly complex, but I think it's like that for a reason. I think it actually matters. But as a trader, it doesn't need to be complex. All we need to know is how these things operate, right? So I can measure this range, duplicate it, right? And I understand that price is likely to go to one of these levels. The why just helps me to have confidence in that. Maybe that helps you as well. Okay. You don't need to apply this to your system. You could take profit here. You could take profit right here. This gives me a little more confidence of where price is going to go. It gives me the tighter exits, right? So it also gives me confidence that we're going to go higher because I understand what we're doing. I understand what the algo is doing, which is that manipulated is going to book to one of these levels. Don't know which one exactly, so I picked the first one. Right, but that gives me confidence in the direction as well, so it helps with bias, right? So everything that I'm adding to all the concepts that I'm going to be introducing you guys to are not changing the plan in any way whatsoever, but they're solely used to give you confidence in your trades if you want to use them, if they're confusing, or if they don't fit with your psychology, if there's too much going on. I know some people like simpler approaches, which is completely fine. And then there's other people that like more complex approaches because it gives them more confidence. That's where I fall into. I'm willing to deal with the headache because it helps me to build more confidence in my direction and in my trades. Other people find more confidence in the simplicity, right? And focus more on the risk management side of it, which is equally good. There's no proof that this will be any more profitable than the other way. It depends on your psychology. So everything I add, again, doesn't need to be implemented. If you don't like it, or if you don't even, if you feel like it's going to affect your trading or your psychology or how you're viewing the markets because you're going to overanalyze, don't look at it. Slowly introduce these things, very slowly. And if you need more information, you can ask me. We can get on a call, or you can go on YouTube. There's a lot of these things are on YouTube. The thing is that I've curated it into a system that I know works, and very slowly. There are hundreds of ICT concepts, hundreds, and we don't use a fraction of them. We use a fraction of them. That's it. We just use a fraction of them. There's good reason for that, right? So I'm only introducing things that I know work with our system and benefit our system, but they're not necessary. Okay. Again, I really want to reiterate that they're not necessary. Okay. Yeah, and that's it. Is there any questions, guys? Kind of a loaded one, some new information. You're going to see a lot of this stuff packaged, all of this stuff packaged into a new section of the course. It's completely optional. It's advanced. So if you haven't, I really recommend that if you're not in demo, or honestly, if you're not in demo, like if you haven't done your full phase 1, do not look at the new stuff. If you're not done your phase 2, I think do not look at the new stuff. If you're in demo and you're finding success and you want to bring some clarity, then you can start to introduce this stuff. Otherwise, don't, because it'll throw you off 100%. You know what I mean? I slowly introduced this stuff over 8 months, right? Or more, almost a year now, right? So yeah. And now, funny enough, this stuff is gaining super popularity. Now, I didn't use it months ago, but you know, or I didn't use it like 8 months ago, of course, but slowly introducing it over that period at different times, right? Yeah, and figuring out what you like and what you don't like. All right, that's it. Any questions regarding all this price? The delivery of the trades.
That's pretty clear. I mean, it'll be cool to see some videos explaining that in the curriculum. But yeah, I'm kind of in what you were talking about. I'm happy to keep things simple right now, and you know, I like that we have more things that we can apply to the plan, but I don't need to at this moment.
100%.
Yeah, I'm happy where I'm at right now.
You 100% do not need to. I found profitability with the system that you guys have now, and I use it most of the time. Anything that I've added on since then is strictly for bias building, confidence, or a little bit of clarity to maybe tighten my exits.
Yeah.
That's it. But the base model that I got profitable off of was chasing the 2Rs, getting the entries and the risk management in check. Because the system is designed to keep your risk management in check with the ISPs and direction. That's it. And that's all you need to be profitable. When you become profitable, that's when you start to introduce stuff and you start to refine. So I'm going to put it out there for you guys. That's why I haven't uploaded anything, because I don't want to throw stuff on you and then fucking at FM. My God, my trading went to shit every time you change something. I don't want to do that. The last thing I want to do. So I'll put it out there, but I'm just giving you guys honesty and transparency. Do not look into it. Do not add it unless you feel that you're ready for new things. If you're not on point with everything else, the base model, do not even look into anything else. Unless you have questions. If you have specific questions about, oh, why did price do this? That's good. Then you can try and find those answers. But just because you find it, like just because you have an answer doesn't mean you have to add it to your model. Okay? Base model is the best thing for everybody at the start. Eventually add more. All right.
Yep.
Any other questions from anyone else? Or input or anything like that?
Everything was clear.
All right, guys. Sweet. Oh, Kim's already gone. Alrighty. Well, it's just us then.
Yeah.
Well, that's it. That's what I want to show you guys. Walk you through that price. There's a lot to it.
Thanks, man.
No problem.